Most traders drown in indicators. Today I'm going to show you that one line, one simple line could be enough to trade. If you think that loads of indicators and loads of lines and loads of things in the market are going to make it easy for you, you'll be wrong, totally wrong. Ladies and gentlemen, fellow traders, welcome. Good to see you again. Here we are on this wonderful, beautiful day, trading with Rob. For those of you who don't know me, I'm Rob. I've been doing this for 34 years. Here we are. It's the live show, and we're having a little bit of fun. Today, I'm going to show you how you can actually trade with limited resources, limited indicators. You don't need fancy charts, 100 screens all over your walls. You don't need all these fancy goodies. In fact, you can do this on a mobile phone or a laptop. Why we get all overcomplicated is still beyond me. It's still what makes me wonder where we're going with this and why people have 25 screens all over the wall. It's so confusing. And each screen's got 40,000 different indicators on it. It's quite insane. Look, I'm guilty. I've got at least 3 monitors running here for me. And at any one time, I used to have many more, and I actually removed it all and reduced it down to come in, check the trades, take a trade, go and have a nice day. That's basically what it should be all about. I'm going to take my little screen with my face on it, because you don't want to be looking at that all day. I'm going to move it up into the middle and make it a little bit smaller for you so that I disappear up into the middle here. And you can actually see the chart, perhaps. I don't know, maybe not. Don't forget, trading's risky. Most traders do lose money. And if you don't like risk and you don't like losing money, you know the drill. You probably shouldn't be trading. I think if you don't know that saying by now, then you probably haven't watched my show before. But for those of you who have watched my show before, you'll obviously know what it's all about. Let's see who's here. Blue Mango, as always. Hi, Blue Mango. Good to see you. Lovely to have you on board. Excuse me. You know, to give a bit of a cough there. But throaty. It's really hot here in Cape Town. Man, the weather's been insane. Totally hot. But it is summer, so we deal with it. And now they're telling us we're running out of water again. That really always amazes me, is how a town can run low on water, or a province can run low on water, because I always wondered why they never joined up all the towns with a big pipeline, so that if one's got too much and the other one's got too little, you can sort of just pump it through. Never made any sense to me that they never did that. But Cape Town, on the other hand, we are at least now finally building desalination plants and whatnot, which is going to be fantastic. Finally, we're using the water from the sea. I mean, the world's made up of water, and we don't have enough water. That's insane. So at least we're now going down that road. Anyway, it's trading, not water. Come on, what we're talking about. We really should be talking about trading, shouldn't we? I'm going to talk about the one line today. I'm going to talk about why we only really need one line to trade, why we don't need a whole bunch of indicators in the market to trade with. I mean, we really don't. Just think about it. What are you going to do with all those indicators and all those lines when trading is effectively 50-50? Because we all know that when you take a trade, you've got a 50% chance of winning and a 50% chance of losing. And of course, if you're really fortunate and you're a lucky person, you might win more trades than you lose. But most people don't. In fact, 75% of traders actually lose in the markets. Now, I just look at that and think, well, when you take a trade, how many of you actually believe that you're going to win more trades than you're going to lose? Now, hear me out with this extra point that I'm going to give you here, making the full target. In other words, I'm not talking about scalping wins. I'm not talking about, oh, I got into this trade and I quickly made some money. No, I'm talking about a real trade. I'm talking about I got into the trade and I had a target over here and I actually achieved that target. That's what I'm talking about. How many of you actually believe you're going to win more trades achieving the target? So there's my target. There's the trade. It's reaching for the target. It hasn't reached the target yet. Many of you would already trade out at this level and be off and gone. Me, I'll move my stop loss up behind it and try and reach the target. because I know that I'm only going to reach target on maybe 30-40% of my trades. The others will be either small wins or take out stop loss, or for that matter, losses. It just goes without saying. So how many of you actually believe that you're going to have a higher win rate achieving the target that you have in the first place? That's, of course, if you have a target. I mean, you really do need to have that target to get there. Obviously, that's going to make a difference to your whole trading scenario. Before I carry on, let me see who's here. Daniel, morning. Yes, New Year. It's been New Year for a couple of weeks already, mate, but Happy New Year. And wow, here's a lot of pictures. And then only 2 colors in trading, so only 2 ways to win. Nice, great stuff. Robbo, worthy insight views rendered as always. Bravo, keep up the good work. Edit, nice. Okay, lovely. Right, so here we are. I think we are all here. So I'm just going to continue on, and I'm going to talk about one line of trading. It's so important to understand that you only actually need one line to trade. Now, the important thing to also understand, though, is you normally pick out your support and resistance. So you'll go to the day chart and you'll have a look and you'll say, well, where's my support and resistance? And you'll probably pick that level out and say, well, there's a support and there's a resistance. Now, if you want to do that, you can. But you really don't need to. You actually don't need to. I mean, this particular trade's got 3 lines in it, which you really don't need. Effectively, when you're in that area, you can see it without even drawing the lines in. What's the most important line that you actually need? And that is the line that you're working on, the line that you are heading towards. For example, if you're working towards the resistance line, you might only need that line. If you don't have that resistance line and you see it's running around in a range and you just want to know whether you're going to go long or short, you know, this is so simple that I can explain this in 5 minutes. We don't have to go into a 20-minute video or anything like that to actually explain it. Straightforward, really. You need this one line, and it's a trend line. You just need that. That's all you need. You don't even need to draw the other one in. You don't need lines up and down. You don't need any lines on your chart whatsoever. What that line tells you is it's a support, not a resistance. It tells you that your trade is now bullish. It tells you if the candle comes down to this line and it bounces off that line with a green candle, it's going long. If it breaks through that, it's breaking structure and it's going short. You need one line. And if you don't have trend, if it's going along in a sideways line, you might only need a resistance line or you might only need a support line. You do not need 100 lines on your chart. You don't need to draw 25 support and resistances in. You only need the one that you're working with. Because what's the point of drawing all the other ones in, and then when it gets there, you get confused because you think, well, actually, it's just going to turn around and break on that point. Oh, I'm not going to take that trade because at that point, there's a resistance and it's going to come back off there, or whatever the case. This is what drives you insane in trading. This is what's going to drive you mad, is having too many things on your chart which are going to confuse you. Because when you... Let's say you draw a line here, line here, line here, line here, line here. I'm not going to draw them all in because I just have to take them all out, won't I? And every time it gets to that line, something's going to happen at that line because that's what traders do. You get to the line and you think, well, it's at that line now, so it's either going to go through it or it's going to go back. I could draw 1, 2, 3, 4, 5, 6, 7, 8, 9. Just on this little space alone, I could draw like 10 lines in here. And it would drive you insane because you wouldn't know when to trade and when not to trade. My old adage, just keep it simple. Don't overcomplicate your trading. Don't go insane with your trading. You can see 100% every single time that one line is enough to trade. What would you trade with on the S&P 500? I'm going to take this trend line out because you know what? We don't need it. We actually don't even need the support line. You can take it out. There you go. How many lines have we now got on this chart? Ooh, one. And in fact, you don't even need that. You could just draw a block in here if you wanted to, but then it's the same thing. So we got one line. It's on the H4. There's the resistance. It broke through the resistance, came back, retested, broke through it, thought, ooh, it might go short, came back up, broke back through it again, it's come back, retested, gone up. That line is telling you to go long on the S&P 500. It's telling you that the S&P 500 is long. At this point, if you're really not confident and you would like some confirmation and you want to draw a second line in, then you might draw a trend line in and say, well, where's it going to go to? Is it going to bounce off there? Is it breaking any structure? But further than that, to draw line after line after line after line after line, all it's going to do is stop you from trading. You only need that one line. That one line has already told you what it's going to do, where it's going, and why it's going there. Hey, it's Coffee with Rob. As always, good cup of coffee always makes your day. Now, the trend is your friend. I agree with that. The trend is always your friend. Also, break of structure in a trend is also actually your friend, because when it breaks structure, you know it's breaking structure. This is a breakout trade. For example, you're trading with this one line. It's breaking out here, big green candle, and it's moving to the upside. The trouble with breakout trends is you have to understand that in most cases, breakout trends fail. In other words, 70% of the time, a breakout trade will in all likelihood fail. Now, I say that very carefully because when a breakout trade works, it runs like crazy and it can make you an absolute fortune. So don't look at breakout trades and say, oh, I don't want to take breakout trades because most of them fail. Just use your simple risk management, use the policies that we always put in place, and understand that breakout trades can make a fortune. The turtle traders, that's one of my videos that are in the list there. Just go and check it out. Go and watch that video. They made a fortune out of breakout trading, and they only won 20 or 30% of their trades. Same old principle. Just follow the strategy, follow the business plan. The business plan is so important in trading, and I don't know why people still don't get it and still don't understand it. Bitcoin, look at this. I've put two lines in here instead of one line. I've got my resistance, got my support. This line is worthless, shouldn't be there. Let's just take it out the way. That's all you need. You can see what Bitcoin is doing. Now, at the moment, you don't need the support line in here at all because it's right at the bottom. So it doesn't really matter. What line are we working with right now at this moment? We're working with this resistance line. What this resistance line has told us is that it's hit the resistance, come down, hit the resistance, come down, hit the resistance, come down, hit the resistance, come down. I'm going to say that 100 times, aren't I? And it hits the resistance again and comes down. What's it going to do next? Hit the resistance and come down or break out? You see, that's what we don't know because we can't predict the future. We don't know what's going to happen next. We can only see what's happened in the past. But what's happened in the past is really important to us because what's happened in the past has given us a lot of good information. But the more times that a price hits a level, you have to understand that it's a bit like chipping away at a wall, and eventually it's going to break through there. So we look at that one line. The line is not something that's going to stop or make your trade go. Behind that line, what is this line? Why does the price keep bouncing away from this line? Is this a magic line with magic stuff? Are there fairies in this line that just when the price gets there, it says, get back. You can't go further than this because we say so. No, there's no magic in the stock market. What's in the stock market is at this level, there's a whole bunch of orders, there's a whole bunch of money. And what does that entail? That entails real money, real traders, real people are behind there. So when you start to see that it's not a chart that you're looking at, there's actually people in there that you're trading with or against, then you understand a little bit better what's happening in these areas. There isn't magic. There's orders there pushing it down, orders there pushing it down, orders there pushing it down. Eventually that money's going to run out. Eventually those people are going to change their mind. And eventually it's going to break through to the other side. That's what your line is for. Now you all come along with all your fancy oscillators, all your fancy indicators, all your fancy little tools in the market, which say, well, if the price gets to this level, then it's going to cross over and it's going to give you this indication, or the Ichimoku if it's above the cloud and below the cloud, and all this complicated mishmash. You get your brain all tied up into this mess. When at the end of the day, what's your one job in the market? What should you be looking for in the market? Now, I just talked about one line, and I put a chart on that's got like, what, 1, 2, 3, 4 lines on it, unfortunately. But that's okay. Don't worry about it. This line can actually come out. Shouldn't be there anymore. That is one that can go. This was a support and this was a resistance. That's about as much as I'll draw in if I can help it. These are areas of liquidity, supply and demand that I'll sometimes add in, but you don't need to add them in. You can simply trade on these one lines. Because what's your one job in the market? Your one sole job in the market is, yeah, you'll say to make money. I know you'll say that, but that's not it. It's to look for the money. It's to look for the liquidity. It's to look for the areas where all those institutional traders with all the big money are moving the markets around. Because the one thing to understand is you're not moving the markets around. I'm not moving the markets around. We are retail traders. We make up a minuscule part of the market. And as much money as you think you've got, you don't have as much money as those people do. And they're trading with huge, gargantuan sums of money, and they're moving markets around. So what you're looking for is where their orders are, where their liquidity pools are, where their money is. And the easiest place to find it is in support areas or resistance areas, because you know that those are areas of interest. Those are areas where they're going to move the market, where they're going to take orders, where they're going to take money, because they're searching out money in those areas. That's what they're doing, and they're actually buying and selling. And if you can ride the piggy bank, if you can find that spot where they are and ride it with them, then you'll be able to pick it up. Which is why you get these guys in the market talking about false breakouts and trying to trick you and I don't know what else. And really, these guys are not tricking you. These guys are not pulling you around. They're just searching out the money. They're just searching out the orders so that they can put their billion-dollar trade in, whatever the case. Our ZAR trade has started to turn around, and I see it's coming back again. I just can't seem to get a break on the ZAR trade, but there you go. This is bearish, has been bearish for a long time. I thought it had broken out. Trading on the one line, thought it had broken out. Comes back to retest, goes back up again. But now it's coming back the other way again. I'm wondering if that one's actually going to work out or not. But as I said, you can literally trade on one line. Look at the NASDAQ. Look at this, okay? I can take all of these lines out here. Don't need them. Don't need this line. Can go away. That's a trend line. Useful, but I don't need it. Because the only line that I'm actually trading with on the NASDAQ at the moment, this is the Tech 100, is this resistance line. Why am I only interested in this resistance line at the moment? Well, because it is so far away from the support line, firstly. So why would I be bothered about that right now? There's no chance it's going to do anything with that today, unless, of course, the world ends or something ridiculous. It is possible that it could play around with this resistance line because it's insanely close to it. So what I'm looking for, it's hit the resistance, 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 hit the resistance. That's an important area. This is an insanely important area because every time it hits this spot, what does it do? It rejects the price, pushes it away. That's the one line that I'm interested in. What I'm seeing is it's pushing it down, pushing it away again. It could go short. What I will do for confirmation is I will add the second line in just to see if it breaks structure and goes to the downside. But if it breaks through that line, that's all I need. Then I know that it's a breakout, green line going to the top. The red line is telling me that it's going down. In that case, I might actually add my next line in, which is the one line I'm going to trade with, and that'll be the only line that I'll be interested in, is the trend support. And the reason I put that line in is simply because I look at it and say, well, if it breaks to the downside and breaks through that, that gives me confirmation that it's going to the downside, and I don't have to just trade it off that particular resistance level there. Trading with one line is easy. You do want to put the second line in sometimes just for a little bit of confirmation. How many lines do you think I trade with on the VIX? Well, absolutely none. Not one. But if I was going to draw one in, there would be one, and it would be the support line. And it would be across the bottom here. That's the only line that I would draw in on the VIX. It's the only line that I'm interested in on the VIX. And I would trade it long every single time. Trading with one line, not difficult, not hard, not insanely out of this world whatsoever. US dollar, Canadian dollar. I actually drew an extra line in here, which was the double top. It broke through the double top. That was the line we traded with. Big long trade, and off she goes. The only reason I've left the resistance line up there is it's a bit of a target. I'm looking for that target. And that's how we trade with one line. I mean, do I really have to go into much more detail about that? Basically, what you need to do, you need to pick out your support and resistance if you can. Those are useful tools to you. Trade with whichever one is working for you, and then use the trend line to determine if it's breaking out or if it's staying in the trend. Easy stuff. That's how you trade. If you don't trade that way, you'll trade a more complicated way. Maybe you'll trade with Fibonacci. Maybe you'll trade with MACD. Maybe you'll trade with stochastics, volume, all these different things. They're not going to make your trading any better. Do this experiment. Do this experiment. Do it on a demo account. Don't do it with your $1 million cash account, because you might lose your $1 million and then you're going to be upset. But if you take a demo account, there's loads of them available all over the market. I don't think you can get them with MetaTrader, but you can get them with I think TradingView and a couple of these other brokers and whatnot as well. Go and grab a demo account and go and open it, and then go and get somebody in your family or a close friend for a week if they're doing nothing, and say, come and take these trades for me. Come and stand next to me and tell me whether I should go long or whether I should go short. In fact, what you could do as well is just have a whole bunch of blockies like this and have them stand next to you, and then go into each blockie and say, choose long or short, and go to the next one, choose long or short, go to the next one, so on, so on, so on. As you can see, once again, I have removed my chart. Why do I always do that? I really don't know. It's just one of those things. Let me see if I can find it quickly and put it back where it belongs. There we go. Take that out of the way, and let's put the template back in. Yay! There we go. And then let's just put it back into the squares. There you are. There you go. It's all back in place, and everything's all muddled up again, but that's okay. It doesn't matter. So the S&P 500 is now over there instead of over there. Let's see if they'll change that around. Nope. It's back at the bottom again. Oh well. But that's how you trade it, guys. That's as simple as it gets. So now we've got US dollar, Canadian dollar as the first one. Wonderful stuff. Wonderful stuff. I hope that makes sense to you guys. If it doesn't, time to ask questions. Ask the questions. Let's see if we can answer them for you in any way, shape, or form. But like I say, if you want to get complicated with your trading, it's not going to help you. Trading's 50-50. Do the experiment. Get your friend to come in, your family member, let them choose the trades for you. And if they say buy or sell, take the buy or sell. Do that for a week. And then see if you get a different result to what you would have got with your trading. But what you do have to do when you do that is manage the trade. So in other words, if the person comes to you on the NASDAQ and they say, I want you to sell, and you look at it, you say, I don't want to sell the NASDAQ. They want you to sell. You sell and you manage the trade the way I've shown you how to manage the trade. In other words, business plan. You're going to risk $1,000 on the trade. So you look at it, you say, well, we're going to go short because they told me to. So I'm going to put my take profit over there. I'm going to put my stop loss over there in an invalidation area. My stop loss is at 26,000. My take profit's at 24,600. And I'm going to manage the trade. If it gets to the stop loss, it gets taken out. We lose on that trade. If it gets to the take profit, we win. Manage the trade, because you can't expect them to manage the trade. They wouldn't know how. And it's your trade. Okay? So make sure if you do that, to manage the trade accordingly. So if someone comes to you on the US dollars that they are and they say you must buy it, you take the long, you put it in, you say, I want the long to go to that level. I actually took it at that point there. And I want my stop loss down at that level. End of story. Take the trade and then see what happens. Simple, really. Just go and see what happens and then see if it makes any difference with that person who knows nothing about the stock market taking the trades or you taking their trades. It'll shock you. In fact, probably surprise you. They might even make more money than you. Imagine that. Questions are open. Anything you want to ask, please go mad. That's the one line. That's the way we trade the market. We trade the market effectively. As you know, my method is generally to trade with support and resistance or trend. That's it. I do like to use supply and demand sometimes, but most of the time I just use the support and resistance, and we just trade with the one line. Okay. Right, so plain and simple, yes, that's it. Plain and simple is what I'm talking about. If you can keep it plain and simple, I do hope that the internet's going to stay on today, guys, because the other day it just, off it went, disappearing into the distance, as it does. Somebody told me that in Australia, you guys have much worse internet than we do, but our internet's normally pretty good and pretty stable as well. I've got to say 99.5% of the time it's up and it's doing okay. Last few weeks, we've had a bit of this, that, and the other, and that's what happened a couple of times with the live show, and it does affect us, but I'm hoping it won't happen again today. Yes, Blue Mango, I always use a three-touch trend line. And why do I use a three-touch trend line? What is the main idea behind using the three-touch trend line? Well, the three-touch trend line, what it actually does, I'm just looking for something reasonable to show you here, something worthwhile talking about. But, you know, if you get the three, is there even a product here with a three-touch on it? Everything's in a trend at the moment. There's the NASDAQ. There we go. So the reason we draw the three-touch trend line in, the three-touch trend line tells you there's definitely something happening here. Now, you can do it on the two-touch, and there has been times where I've drawn a trend in based on the fact that it's trending and there's only two touches. But I mean, I can clearly see with the distance and experience that it's definitely running along that path. But what the three-touch trend line does for you is it gives you that confirmation that that is definitely either a trend or a range, or it's definitely on resistance, or it's definitely on support. What it does is it tells you that there's definitely something happening in that area. So you just got to think for yourself that if it's a two-touch scenario on a resistance, for example, there could be a double top, but by the same token, what you've got to look at is what's happening in that area. And if it's only happened twice, is it really happening? But if it's happened 3 times, it's kind of confirmed that there's something going on there. And then 4, and then 5. But then it starts to get to the point where there's too many, and you start thinking, well, you know, that's going to break through as well, because there's quite a lot of hits on that area. But if there's 3, it gives you that confirmed line, that confirmed area. If you see me work on a 2-touch or even a 1-touch, that's just my experience telling me that looks like the level, that looks like it's trending in that direction, and I'm going to use that for myself. For example, is there anything here? Let me just have a look at gold. Gold, it's got 3 touches, but I mean, if I looked at that trend and it only had 2 touches, I would look at it and say, it's pretty much a trend. You know, it looks good. It looks like a trend. And I would go with that trend. You know, I'd say, well, that's a pretty clear trend. I'll use it. I'll use that trend and I'll work with it. But I like to have the 3 touches for the confirmation. Yes, absolutely. If you can, do that. I would say to you, the more touches that it's got, the better. But then, like I said, the more touches it's got, the more possibility it's got of letting you down and breaking through. And then you've got a breakout trade. So you've got to watch out for that. But the easiest way to do that is just to determine if it is breaking through or not. Sometimes I don't even use a line. Sometimes I'll just use a demand level like this on the Japanese yen, because I don't need to draw a line in here. I can clearly see there's a push to the upside here, which means there's money in this area here. It's probably going to come back and take that money, then go up. You don't need a line for that. Germany 40, on the other hand, this requires a line. And you're going to get a nice 3-touch line out of here. The big question is always, where do you draw the line from? You can draw it all the way from the bottom and have a wide, you can draw 3, 4, 5 lines in if you want to on trend lines, because, you know, if it comes through the first one, it's going to go through the second one, third one. But I don't. I just draw the one line in. I'll work with that. If it's breaking through that first line, then I know it's breaking structure. I don't need the other lines there just yet. If it breaks through that, then I'll draw another line in and see how far it's going to go. Start changing my structure, but just leave the one there. It doesn't confuse you. I know that this is bullish. I know that it's going up. If it comes down to here, hits this, gives me a green candle up, it's going to continue on up. But I've got the 3 touches, 1, 2, 3, 4, 5 touches. I know that that's the trend. It's a clear trend to the upside. I can work with it. That's all you need in the market. You don't need much more than that. You don't even need to draw support and resistance in there, because you can see there's a clear trend. It's trending to the upside. You're going to look for the resistance. For what? Euro Great British Pound is clearly working on resistance and support. But at the moment, what it's done, it's broken the support. Very important to note that. And if you're not sure about that, you can take it to the day chart, or you can just have a look on the wider run here. That was a support line which had hit a number of times in the past. If you go further back, it's further down, but that's further back. If you keep to the recent, this is a major support. It's broken through that major support. There is another support further down. Then you're just going to start drawing more lines in that you don't need right now. But what you can do now is you can start moving things around. You can say to yourself, well, it has broken through that support. It's broken clean through that support. So this is now short. So if I look at that, I'll say, well, that looks pretty short to me, so I'm going to go short on that. So what's my next trick? My next trick is, well, hang on, then I don't need that resistance anymore. Then I just need this support, but I need this support to come down to the next support level. And I need to move the resistance from all the way up there to all the way down here, where the new resistance is, because it's moved. It's broken through. It's now going to the downside. Now we've got a different picture. Now we've got to change the picture completely. Interesting that, isn't it? This is how the market moves. The market's alive. It doesn't stagnate. That's why I say to you, you can take a totally inexperienced person and tell them to come and stand next to you and choose your trades. It changes all the time. And you taking trades based on a few lines thinking, oh, I've done that right. And then you look again and it's all changed. So don't get overconfident with that type of scenario. So now we know it's a bearish trend, and we know it's coming down into this bearish trend. Now we can take this back a little bit bigger again and have a look at what we've got. Now, you might want to turn around and say, well, this trend is quite long. I mean, we don't really need this, but we can see where that trend is. Now, there's a couple of things that this is where lines get in the way. You see, like this line, it's going to come down to that, and you're going to be like, oh, should I take this trade or not? At the moment, this is in the middle between the new support and resistance, but it has broken to the downside. That break to the downside says it's going down. So you would want to be short on the Euro Great British Pound. So you'd want to be short on it at that scenario. It's a 1-to-1 at the moment. Not a great trade. Why? Because it's in the middle. It's in the middle, Cyril. You want it to be a little bit better than in the middle. You want it to be kind of like giving you a little bit more of a win. But that doesn't matter. You've now moved all of this. You've taken the trade because it broke through the previous support. But now you've got a new support and you've got a new resistance level that you've drawn in. And you can work with that if you want to. You can take out this major lines over here. You don't need them. They're not necessary. You can draw shorter one in if you want to, in case it breaks to the upside. This is definitely broken to the downside. You can clearly see that. If you draw this line in here, this is broken to the downside. This is a clear downward trade. It broke the main support. It's also broken the trend support. It's moving to the downside. That is a short trade. End of story. You know, trading doesn't have to be complicated. You just have to look at it for what it is and just trade it according to that. Sorry, I do tend to leave lines in that shouldn't be there anymore. And, you know, I just forget to come back to them and take them out. See, now if I start working on this chart as well, this is all going to change. What's happened here is this is broken out. It's broken out and it's broken to the upside. So if we start looking at this trade now, things have changed. In other words, this is now support. So what you want to do is you want to take your resistance and either delete it or move it to the top and take your support and move that up to where that was. So now you've got a completely new level that you're working with on this trade. You take it back and don't make them too big. And then you can clearly see where you are. Now it's pushing through a new level and you've got a new support at this level that it actually broke through. This is a breakout trade. It's moving up. And if it keeps on going, that'll be great. But now it's starting to flatten out. So I've put a new resistance level in. Easy. You only need the one line. You don't need both, but it's nice to have both of them there. It just makes it easier to trade, doesn't it? So a breakout suddenly becomes a new range. That's just kind of how it works. There's no way around that. This Japan 225 was going to the moon. It was actually the Japanese yen that was going to the moon. This must come out because that is now gone. That's history. And the new level will be over here. This can come out. We don't need that line at all. Take out as much as you possibly can. Now, what have we got here? What we've got here is a whole bunch of money lying at this level because there's a demand level here. Draw that in and see if it comes back to that. That will be your trade. Where is the US dollar Japanese yen? This one was going to see if it could like actually reach the moon. And it was getting pretty close. Once again here, whatever demand level of money, which it might come back and take and carry on going up with that. How many lines do you see on this chart? That's a price line, by the way, so you can't count it. Good coffee. You don't see many, do you? In fact, you don't see any. All you see is that block. That's all we're trading with. We're just trading with that block. Now, if I look at one of your charts, I guarantee you I'm going to find a whole bunch of stuff on it. You don't have to worry about it. We've all been there. I did it for many years. If you look at one of my older charts, I mean, the chart was so small you couldn't see it because there was so much stuff on the bottom here. And there was all these lines everywhere. There was one stage where I had lines all the way through the chart. Inexperience, you know, early years. You get rid of it and then you realize that the market's 50-50. It really doesn't matter how many lines you got. Just look for the thing you're trading with. Take the trade. You know, the difficult part is being able to take that trade, to get the confidence to actually take that trade. There's so many of you will struggle with that confidence to take the trade. And the main reason for it is not because you're not confident or because you got too much fear or because you don't know how to trade. 9 times out of 10, it's because you've got too many lines on the chart, too many indicators on the chart. sending doubt into your mind, loads of doubt, because you can literally end up trading against yourself because all of the systems work. And if you put too many systems on your chart, one will tell you to buy and the other one will tell you to sell, and then the other one will tell you to buy and the other one will tell you to sell. What will eventually happen is you'll end up trading against yourself. And this has happened to me before in the past when I had too many things going on the chart. The main reason for it is you're constantly looking for a magic pull. You're out there. Where's that magic pull? Where's that fairy that's going to show me how to trade and make me money? And then you're going to add it onto your charts because that looks good. I mean, you find a system, you see a guy making loads of money with it. You think, well, that looks like a great system. I tell you what, I'm going to take that. I'm going to add it to my charts. But you don't take the old stuff off. You just add that onto the stuff. And when it doesn't really work too well, you go out there and you look for another magic pull. You think, well, I'm sure that'll work. Let me put that on there as well. And you add a few more things on. You don't take the other two off. You add that on. So now you've got 3 systems on your chart. And then you kind of go out there and you start looking for more. And it's just a never-ending cycle of doom, as I call it. It just gets worse and worse and worse and worse. And it just never gets better. Whereas if you just stick to one simple system, one simple easy trading system, you'll find your way through and then just follow the strategy. And I try and separate the word system from strategy because effectively, as you know, I try and give you guys the strategy as the business plan. And the strategy has got nothing to do with lines. It's got nothing to do with systems. It's got nothing to do with charts. What it's got to do with is obviously the ability to manage the trade, the ability to manage a risk, and the ability to make a profit. That's what you're looking for at the end of the day. You're looking for that profit on a bunch of trades. Those bunch of trades are going to make you some money at the end of the day. That's what you're looking for. So you don't just have one trade in place. There's a couple of trades that come and go, and then there's a bunch of trades that are in place. And I think this account would be in a little bit of profit at the moment. Yes, it is. It's $600 in profit or something at the moment. A few trades going on there. That's all you got to do. Not rocket science, guys, not rocket science. Yesterday, I did say the euro-US dollar would go short, and it did, but now it's starting to come back for a retest. Sometimes that happens. We just got to see if it's going to bounce here and go down, or if it's going to try and break and go to the upside, which it could do. It does do that from time to time. So guys, ask your questions. Go ahead. No problem. Get those questions out there. Don't know who's on the live show today. How many of you are here? Let's get this show on the road. Let's have a chat. Come on, let's chat. Let's have a good one. I don't see Sir Lunch a lot here today. Missing him. Hasn't been around for a while. Great British pound US dollar. This trade paid off. Why did we take this trade? This was a clear example of a trend or a resistance or a support line that was broken. So this one literally broke the support at that level, broke through, and it also broke through the trend, and we took the short, and the short actually paid off. It actually came all the way down and gave us quite a nice profit based on the fact that it was short. Why did we get out at this level? Actually, we didn't. I don't get out of trades. So what I actually did was I pushed the stop loss down into a major profit. And while I was sleeping, it went back and took it out and then carried on down in the following days. You can see here it went back, took out my stop loss in this area somewhere, and then it came down again. But that's okay. It didn't come down much further, and now it's gone all the way back up again. So it would have taken that stop loss out anyway. But that now pays a fair profit. And that's what you're looking for. This actually made more than the actual target. So that's what brings the account back into good stead. So even if you lose a few trades and you make one big win, then you make some money out of it. That's what you're looking for with most of your trading, is a bit of a relaxed trading scenario. In other words, where you can sit back and leave the trades in place. You don't have to sit and watch the charts all day. You can sit back, leave these trades in place. So what I do, this is an oil trade. As you guys know, I often trade oil. And then what I do is I say, I'm buying this long. I bought it long. I have the feeling that it's going to go long. So I take it long. I look at the chart and say, I think that's going long, so I buy it. Then I don't sit and watch it all day. Because if you sit and watch it all day, what actually happens is you get these red candles in between. But I'm buying, so I want green candles, right? So what happens now is you see the red candle, you think, oh, it's going short now, and you sell out because you're sitting watching the charts, because it looks like the world's gonna end, because maybe the USA or Donald Trump says something, or something happens in the Fed, or whatever the case, or somebody tells you the world's ending and the oil's going to go to zero or whatever, and you see that red candle and poof, you sell it. I find that if I don't watch the charts, if I just leave them on their own, and I've taken my trade in the morning and I've said, well, that's the trade for me, I'm taking this lacquer long trade on oil, and then I'll leave it and walk away. This has been on for a few days, in fact, and you come back and you see the red candles in between, but they're gone. You're back on green anyway, and you're just waiting for it to reach your target, and that's all you're really concerned about. And in between, I bought it down here. The stop loss is way above in profit. The profit is a couple $100 in profit. I can take that and move it all the way up if I want to, and just follow this behind. And in fact, if oil does get to the target while I'm still awake, that is, and I've got my eyes open, I'll actually move the target away a little bit and move the stop loss up again. The further, the better. I'll move the stop loss up to the original target and then keep pushing the price up away, because then you can actually make a huge, gargantuan sum on some of these trades if you do that. It's a good way to trade. And yes, that's a 4-hour chart. These are 4-hour charts. Look, when you're looking at getting some levels, you can take it to the day chart. You can take it to the weekly chart and just have a look on the weekly chart. Is it bullish? Is it bearish? You can go to the daily chart again. What's happening on the daily chart? Ooh, it looks pretty, pretty bullish. Go to the H4. Yeah, still looking pretty bullish. That's the one we trade on. I very seldom go back down to the H1. Not my thing, not my thing, because looking for that sniper entry, because I'm taking it down to lower time frames. I prefer to just take my trades on the time frame that I'm on, and I'll look at the higher time frame to determine which way the world is moving, and take the trades on the time frame that I'm trading on. And there's been many a time in my life where I've traded on 1 minute, 5 minute, and 15-minute charts and things like that. Not recommended whatsoever. It takes your life away. You spend your time watching charts, you spend your time trading on charts, and the information that you're getting there is insanely unreliable in the first place. So here you are trading on 5-minute charts with the hopes that you're going to somehow beat the markets. I learned my lesson many years ago that you ain't going to time the markets. You're not. You could be lucky, but you are not going to time the markets. You can make money on those 5-minute charts if you happen to take the right trades the right way around, and they kind of make you money. That's great, and that does work. I've had a few successful moments, but the trouble with 5-minute trading, 1-minute trading is this: it's soul destroying, because you'll win 8 trades and you'll be on top of the world. You'll think nothing can touch me. Everything I touch, I got the Midas touch, man. Everything I touch just wins. It just never loses, and you just keep on trading. And the 9th trade comes along, the evil 9th trade with all its claws and teeth. It comes along and it says, so you think you know how to trade, eh? Let me, the market, show you who you are. And it takes all those 8 wins away, swoops them up, throws them in the bin and says, there you go, back to square one, eh? And a bit of a loss to add to it. There you go. That's what day trading does to you. It can be very soul destroying. You see, the thing with the psychology of day trading is you don't calmly put your stop loss in place. You don't calmly move your stop loss around and your risk and your take profit. Kind of everything's in a rush. So generally what a lot of traders do is they don't adhere to the stop loss. And they feel that, you know, well, it's only a spike, it's going to come down, it's going to come back again. And then it's not just a spike, it's actually a real move, and then it moves and it moves and it moves. And the deeper it moves into loss, the more you believe that, well, it's gone a bit deep into loss now, so I don't really want to take this loss because I'm in a loss. So now I'm going to try and average it back and try and get back to cost, because it surely will, won't it? And no, it won't. You see, and then it just gets worse. It gets worse and it gets worse. And that's how it wipes out all those wins. It sucks you in. Sucks you in. See, day trading sucks you in because psychologically, what happens is you get sucked into these candles, right? So you get sucked into all these different candles. And like I said to you, if you're sitting watching charts and you see that red candle when you've got a green, you're going to jump out. So if you're day trading, you're going to jump out of trades too early. Psychologically, there's very few traders that, particularly on a 5-minute chart or a 1-minute chart, that can sit and watch their trade go to profit, go to full target. Because they're sitting watching charts and they're sitting watching that candle go up and down. I mean, a 5-minute chart is insane. Look at that. Okay, so there's your 5-minute chart going up and down. And you're sitting watching this chart go up and down, up and down, up and down, up and down. And you're thinking, oh, there's a big red candle there. I'm going to have to sell that. Now I'm going to have to get out because this long run has been quite a while now. I've made a good long run. Look, another red candle. It's going down. You see, you're going to start going into panic because you're watching this chart and you're going to get out the chart early, or you're going to get out of the trade early. Same goes for the losses. If you're in a loss, you're going to try and average it down and think, oh, I'm going to get this back. And then you're going to go into the trade and it's just going to go against you. So you've got to be careful of these scenarios, which is why the swing trading, position trading that we do is that much more reliable, because you can calmly and slowly take your trades, walk away, leave them, come back and check what they're doing later on. You know, I'm not concerned if it happens to take out my take profit while I'm not looking, or my stop loss. I accept it. You know, that happened. That was my plan in the first place. It's quite okay. But I'll never move my stop loss back. I'll move it into profit. This has been well moved into profit. That'll always do. But I'll never move it further out. And my take profit, I will move further out. I will, if I'm watching and it gets close, I'll move it further out and move the stop loss up close. Because then I'm where I wanted to be in the first place, and that's trading. Oh yes, Blue Mango says oil is bullish, Rob. I hope you got in. This is oil, and yes, I got in. I'm actually well in profit and making all the money back that I've probably lost over the periods and whatnot. So it's fine. And yes, the stop loss is even in profit, well in profit. So yeah, no worries there. Oil, we got in. This is actually the oil trade that we're looking at here. So yes, we got into oil. That was a good one. That was a nice one. Trouble is, I also got into the ZAR recently, and that one's gone against me. So yeah, here we go. ZAR. That one has decided to give me a headache, so to speak, again. I am trading against the trend, but it did look like it had broken through and broken out. So I thought, oh, there we go. Get in there. And best laid plans of mice and men. It has, once again, turned against us. Yeah, we live with that. But I am very interested in this NASDAQ trade. Very interested in this NASDAQ trade. Why am I interested in this NASDAQ trade? Who can tell me? I mean, just look at it. Look at that. And am I only interested in this NASDAQ trade because of this chart? Well, no, not really. You see, the chart is wonderful because there's a big area of interest at this resistance and I'm waiting for it to break out. But what's got me interested is the old S&P 500, because that has actually broken out. Bit of a pincer top here, that is a concern, but effectively it's broken to the upside and moved to the upside. It's an interesting trade. The pincer top is worrying. It is worrying. It does give me some concern. And if you take this, what was a resistance down there, and move it to the new area, resistance is up here and the pincer top is just above it and it's pushing it down again. So yes, that is of concern. So that's why I wait for the NASDAQ, which looks like a much nicer trade. And if I look at it, look at that, it's just on that level. There's only one or two things that can happen to the NASDAQ. It can either break to the downside or it can break to the upside. At the moment, nothing, but looking good. It's looking like an interesting trade. For those of you who don't know what the NASDAQ is, it's the Tech 100. It's the main tech stocks in the US. Okay. How do you draw your support and resistance? I see Michael Saylor bought $1.25 billion of BTC. If Michael Saylor bought $1.25 billion of BTC, then perhaps we should sell. Just a thought. You know, that I just got lucky. Let me be fair, but not actually. You know what he applied? He applied the exact business plan that we talk about on a regular basis. You know what he did? He managed his trade. He managed his trades. He managed it. He decided it's going that way, and he had deep enough pockets to hold on, and he held on with those deep pockets. A bit of a sweat, but he held on with those deep pockets, and it eventually paid off, because eventually it will pay off if you've got deep pockets. It's much cheaper to stop loss, to be fair. He just stuck to his plan. That's all he did. Okay, the question was, how do you draw your support and resistance? It's very simple, really. There's two ways I do it. The one way is I make it really, really, really narrow like that. And I look, this one can actually come out. We don't need that one. I just put it there as an extra. There's my support. There's my resistance, right? 3 touches, more than 3 touches, more than 3 touches. There's a support and resistance. Do you want me to add another 20 lines in? I'm not going to. Like I told you at the beginning of the video, you only need 1 line. You don't even need 2. Okay? Situation you've got, I'm not going to draw all the rest of the supports in, because when is it going to get there? Ever, right? So you just need the resistance and you need the support line just to see what sort of range you're in. At the moment, the only line I'm interested in is the resistance line. The second way to draw this is to take it to the day chart. Take it to the day chart, look at it on the day chart, and draw it in on the day chart. Why do I draw it in the day chart? Because it just gives me more accurate, reasonable information. Okay, the higher you go, the better the information. Just take that out, it's really old. Okay, so now here we go. Let's take these out as well, because they're also, I don't know why they're still there, but they're from past history. There you go, out you go. Sometimes these, that's the one thing with the MT5, it doesn't take your old stuff out. It kind of leaves it in there forever sometimes, and it drives you insane. You don't want it there, and gets a bit annoying. Right, okay. So I've taken this to the day chart, and in the day chart, I've already drawn this on my 4 hour, by the way. I'll put my resistance in there, I'll put my support in there. Now, I could also draw blockies in, you know, like these blocks, just to get the area of where we are, the area of interest, because as you all know, a line is it's not a line in the sand in the stock market. I mean, it's not a magic fairy. There's no magic pull. There's no magic fairies waiting at that line saying, ooh, the price can't go past here. Got nothing to do with that. As I told you earlier, there's all where the money is. That's all where the orders are. There's human beings in that area which are pushing it down. I use a straight line because I'm lazy, okay? I could actually take a block and I could draw it in based on that, and I could say there's the resistance and so on. But I just draw a line in and I can see my candles and I can see it easy enough. And I know that general area is the area of interest. And also, if you want to be OCD, you can like really take the points and see where they are. You need more than 3 points. Very important. And you know where your resistance is, you know where your support is. Now you look at this and you think, where's all the points here? Well, they're there. You just go back and have a look. They're all there. That's where the support is. That's it. Okay. You don't need to draw it in on the day chart, but it does make life a little bit easier for you if you do. And it's easy to draw if you get better information, more solid information. You only need to worry about that resistance line. That's the main line that we're worried about at the moment. Maybe this little trend support that I drew in here, because I'm not going to take a trade until it either breaks through there or it breaks down through there. There's your support line down there. It is there. Okay, so now you've got big candles. I mean, you can have small candles, you have tiny little ones, you can have big, massive ones. Totally up to you how you like to trade and what you like to see. Just remember, the bigger the candles are, the less you can see, so let's watch out for that. Okay. $1.25 billion of BTC. He's obviously very confident that BTC is going to do well. I'm actually very surprised to see Michael Saylor buying BTC like that. And I'll tell you why. Because he calls the shorts, right? And then BTC, for me, is, it's neither here nor there. I couldn't possibly tell you if it's going to go up or down at this point. As well as the fact that if I look at crypto as a whole, I mean, yeah, I'll trade it. Of course I'll trade it. I'll trade orange peels if they're available to trade, as I've told you guys before. Look at the resistance that it's bouncing up against. And here I did draw the block in. It's bouncing off that resistance all the time. But if I'm trading it, I'm not going anywhere with it right now. But investing in crypto, not my thing. If I had $1.25 billion, unfortunately I don't. Perhaps you guys could lend it to me. I don't know. $1.25 billion seems like a lot of money. But anyway, if I had that kind of money, I wouldn't invest it in crypto at all, because I see crypto as fresh air. I see it as one trader trading against another. I see no asset value on this product. I see nowhere that this product offers me any kind of information on asset value. And if you don't believe me, just go and ask Warren Buffett. Go and ask Jordan Belfort, the Wolf of Wall Street. Go and ask any of these guys what they think of Bitcoin. In fact, go and ask Jamie Dimon. He runs the bank. So go and ask him. He'll tell you exactly what I'm going to tell you. This thing's got no asset value. It's got no security on it. Okay? We don't know. The only thing I'm counting on with crypto as we stand at the moment is too big to fail. And that's why I'm prepared to trade it, because on a too big to fail, I should get pretty fair warning if things are going pear-shaped. That said, that's Bitcoin, not Fartcoin. I don't know what's going to happen with that. I mean, that's a totally different ballgame altogether. So if I had $1.25 billion, I would put it in shares, because I know, proven track record, that every single one of those companies in the shares, if you look at it for the last 100 years, has made a profit. It's gone up. And if I see one of those companies going a bit pear-shaped, I can take that investment out, put it into one of the other companies. And the more companies that I buy in that investment, the more I water it down. So in fact, if I've got 20 companies, if I've got 10 companies and I lose one, that's 10%. If I've got 20 companies, I lose one, that's 5%. So if I've got 40 companies, that's 2.5% of my portfolio. If one company goes down completely, right? Got that kind of money, I'm going to buy all those companies. I'm going to set and forget, and I'm going to leave it there. I'm going to get paid dividends by those companies. I'm going to be major ownership in those companies. And those companies are going to grow over the next 30 years. Well, that's not going to work for me, because I don't know, will I live for another 30 years? I really don't know. That's quite tricky, actually. But no, if I was young and I was 25 years old or 30 years old, yes, definitely put it in there for 20, 30 years. You're going to make an absolute fortune. You're going to be, well, you're already rich. What, do you really need to become more rich than $1.25 billion? No, actually, you know what I'd do with $1.25 billion? I'll buy a boat and sail around the world. Goodness me. What's wrong with you guys? Seriously. Why would I buy Bitcoin? Am I insane? I must be insane. No, I wouldn't buy Bitcoin. No, I'd have a ball, especially at my age. I'd just go and party, man. Just go and have a good time. $1.25 billion. No, I'll just go and party. That's it. Have a bit of fun. It's going to last me forever. How am I ever going to spend that kind of money? Have you ever thought about that? $1.25 billion in your account. Would you be able to spend it? I don't know. I don't think so. At least I wouldn't. I couldn't. I wouldn't be able to. The interest alone would just keep drowning me. I wouldn't be able to spend that money. And, you know, especially like me, I really don't have a need for a Lamborghini or a Ferrari or anything like that. I don't have a need for a huge building or anything. I do have a nice home, but, you know, further than that, I don't have that need. So maybe if you have that need, I don't know. But shiny stuff is not that meaningful to me. So yeah, I wouldn't be able to spend that kind of money. So yeah, why? I don't know. Maybe I would invest it in the stock market. Yeah, of course. But why did you invest it in Bitcoin, man? Go and blow it. Go and have some fun. Yeah, certainly. What do you think about gold? Okay, the question is gold. I'll get to that. Oh, right. Sorry, got that mixed up. Sorry, man. Okay, thanks, Blue Mango. I'm getting mixed up between Michael Burry and Michael Saylor. Okay, good. Yeah. CEO of strategy, right? If you're 39-year-old or you're never too old at that age. No, 39 is not too old. I mean, you'll be okay. You still got 20 years of investment, maybe more, 25. You'll do okay at 39. Wouldn't be able to spend it. Have you seen my wife's shop? No, but if she can spend it, wow. Okay, no, Investors answers no. I know what time you get on. Yeah, no, generally, look, Tuesday's an hour earlier. Tuesday's 1100 GMT plus 2, and on Thursday's 1200 GMT plus 2. So if you're looking for me, find me there. And if you missed the beginning on the training bit with the one line and that, go back and have a look at it. It's interesting. Gold. Tom, 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 tom. I was looking at gold earlier. Interesting little scenario. Gold has been moving up and going along quite nicely, but if you noticed that it has actually still been stuck at the 4,000s for quite a while now. Now, I spent years, because I've been doing this for 34 years, guys. So I spent years watching gold do nothing. When I say nothing, I mean nothing, okay? While shares and indexes moved up and did well, gold did absolutely nothing. And now it made a slight move over the last year or two. So everyone's excited. Everyone's jumped on the bandwagon of, ooh, gold's going to go to 7,000. Ooh, gold's going to go to 200,000. Oh, gold's going to do this, gold. Let me tell you something about commodities that I know. Commodities are cyclical. If you don't know what the word cyclical means, it means goes up, goes down, goes up, goes down, goes up, goes down, goes up, goes down. Goes along in a straight line generally. Very unusual for gold to do this. Okay, so that's great. This is wonderful that it's done this. Why has it done this? Well, a lot of it has got to do with this. Let me see if I can find it. This is the US dollar index. It's kind of, well, I don't know if I can get any, yeah, it's kind of come all the way down and gone into this little range here. It's got a lot to do with gold. Because when the US dollar weakens, you get a commodity super cycle. The dollar's eventually going to strengthen again. And when that happens, then your gold is going to do what? It's going to swap. It's going to start sort of lying in its cycle again. It's going to go flat. It's going to stop running up. It's going to die. It's not going to go to 10,000 or even 7,000 that easily. If it does reach there, bully for gold. I just trade what I see. But I doubt it. Look, gold, wonderful product. It's long at the moment. It's bullish at the moment. It's strong at the moment. There's a lot of sentiment running around gold. The dollar weakening has had a lot to do with gold on its move and its trajectory and what have you, the politics around it and all the rest of it. So gold has had its moment. And, it really jumped because, I mean, it's sat around, firstly, it sat around 600 to 800 for, I don't know, a million years. And then it went to 1,500, 1,600, 1,400 for another million years. And then it went up to 2,500 for a couple of years. And now it's jumped through the 3,000s into the 4,000s, 4,500. And how exciting. Okay. So here we are with gold again. Now, yeah, I used to have friends who used to say, oh, the country's going to go mad. It's going to die. Buy gold, buy gold, buy gold, buy gold. And the funny thing is, you can buy gold and you can buy oil and all that on the market like we do. There's lots of my friends that would actually buy physical gold and then go and keep it at home. Do you know how expensive it is to do that? Firstly, you have to store it, you have to keep it, you have to stop people from stealing it. And the reason they did that is because they were scared that something was going to happen to the world and the money was going to go away and then they would have something to barter with, something to that effect. But anyway, not my thing. Now, if you take gold like a Kruger Rand or anything like that and you go and buy it at a dealer, they're going to charge you an insane commission, okay, a large amount of money. And then if you want to go and sell it, they're going to charge you that same insane commission again. So you're actually taking a massive loss when you buy and sell physical gold. So the nice way to buy gold is on the open market like we do here, because then you're not taking much of a loss either way. You're just paying the small fee that you pay. But as an investment, if you said to me today as an investor, would you buy one of the shares, Tesla, Nvidia, whatever, or would you buy gold? I'd buy the shares. I'd buy the shares every day without even question. I wouldn't even think about it. I'd buy the shares. But if I'm trading, different story. Trading, yeah, as you know, we trade orange pills, we'll trade anything, we'll trade Bitcoin, And at the moment, it's bullish. It looks bullish to me. It looks like a nice bullish trade. I'm just going, I went on a rant there because too many people are bought into gold in some psychological way. And I know gold, been there, done that, sold a t-shirt. We used to have this guy here in South Africa that used to rave on about gold. His name was Clive Roffey. He's probably quite old by now. And he kept on, gold's going to go, gold's going to go, gold's going to make money. And he went on for so many years about gold. It went nowhere. I hope he saw this run. I hope he was involved in this run because at least he would have got a chance to double his money at last. But yeah, no. Forget about gold. Gold mining has also become rather expensive, by the way. It's expensive to mine the minerals. Just keep that in mind. I live in a gold mining country, and it's not cheap to mine that gold. So, yeah. But yeah, it's bullish at the moment. It's bounced off its support. It's in a trend. It's trending to the upside. Fantastic. If you was going to do anything with it right now, it would be a buy. That's for sure. I would buy it totally at the moment. At the moment, it's a buy. And also, you've got to think of these things as well. For example, you buy with sentiment. That's like trend is your friend. You buy with sentiment. If you buy with sentiment, sentiment can take you quite a long way. Right. A couple of guys have said that I waffle a bit, so if you don't like waffling, you won't want to be watching this show, that's for sure. Yeah, I know. Yeah, I'd love to know if anyone can spend that $1.25 billion besides Blue Mango's wife, of course. That's quite a large sum of money. I mean, at my age, I doubt I'll be able to spend it. It'll get left behind. And then, I'd actually, I think I'd write in my will, bury all that money with me. And everyone will be like, sad, oh, why didn't you leave it to me? Yeah. Yeah, that would be sad, wouldn't it? US 30. That's an interesting one. Let's take these lines out of here. Get that out the way. Let's have a look at the US 30, shall we? See what's going on here. Well, that's on your day. Let's take it to the day chart. Just see what we've got here on the day chart. See on the day chart on the Dow. Wow, look at that on the Dow. That's actually quite interesting. The Dow Jones. Yeah, look at that. You know, it's just a straight old bullish move. You asked me earlier about the 3 touches. I mean, there is 3 touches on here. 1, 2, 3, 4 actually, but it looks like more like 2 touches if you think about it. But this is clear to me that that's a trend. I mean, I don't need to think how many touches it's got. I can clearly see the trend here. This is on the day as well. So it's clearly got a nice trend to the upside. I'm just looking at that and saying, well, that's clearly to the upside. It's broken through a resistance. And it's clean going to the upside on the day chart. So if I look at the day chart, that's cleanly broke through that resistance going up. It's retested and it's continuing to go up. So on the day chart, that looks pretty strong. If I go to the H4, I mean, it looks pretty strong there as well. Look how it's broken up, broken through that level and moved to the upside. So it does look pretty strong as far as the Dow goes. So the Dow's a buy. The Dow's a buy, but it does seem to have gone a little bit flat here. Interestingly enough, so just keep your eyes on that. But yep, there you go. That's the Dow. Interesting stock. The FTSE 100. You know, I spent years trading the FTSE 100. And the FTSE 100 was always in a range. Always in a range. Always stuck in a range. And it's a bit like gold. It's been a long time since I've seen the FTSE make a run like this over the last year or so. It's been a very bullish run on the FTSE. Strong bullish run to the upside. Lots of strength there. I mean, everyone talks about the UK failing, but this doesn't look like failure to me. This looks like strength. This looks like a lot of strength. Look at this all the way up. And for many years, the UK, the FTSE, was sitting in a straight line, just going along, ticking along, cycling along in a range. And for the last year or two, it's been just climbing all the way to the top. Who would have thought that it would go from 4,000 to 10,000? This is an insane move, okay? That speaks to me of it could be inflation as well, you know, the value of the pound. But the pound is very strong. And this move in the stock market tells me the country is very strong. I just, you know, when I watch the news and I see all this bad stuff about the UK, this doesn't speak about it. This doesn't talk about it. This talks about strength. This talks about an economically extremely strong economy. So, yeah, I don't know what everyone's on about, to be fair. But if I look at that, yeah, there might be inflation. I get that. But yeah, this is crazy. This has gone really hard all the way from the back. So the UK 100, pretty strong. That looks like strong as well. Germany as well. The DAX. Wow, the DAX has done well. See if I can find it on these charts. There's trouble with having too many charts on the block. But I mean, I put them here so that we can do this live show together and we can find the charts easily. But obviously it's not that easy because, I mean, I can't find the charts. There it is down there. The DAX. The DAX is another one that's just gone straight up. I mean, this guy has just been bullish for such a long time. We take this back as well. Okay, it went into a range for a while, but you know, the DAX has always been one to trade in a range as well, but also it's just bounced, shot straight up. Let's just take that out as well. Don't need that there. So that's quite a strong run. I mean, you could take this and just draw it from here as well, straight up. Nice, strong, beautiful economy. Nothing wrong. Everybody talks about Germany as well. Look at this. This is insane strength. This is going really, really well. Sometimes I wonder, they're just trying to pull the wool over our eyes somehow. Because that looks like strength to me. That doesn't look like weakness. And I mean the US as well, S&P 500. I mean, shares are not failing here. This looks insanely strong. Look at the US 500. This is the United States of America. Look at the strength bellowing out. S&P at 7,000. Crazy, crazy stuff. This just tells you strength. Yes, there's some inflation. You know, when people talk about unemployment in America, actually, I don't know, I want to sometimes just burst out laughing. Oh, everyone's unemployed in America. You know, it's always under 5%. If it goes over 5%, America declares almost a state of emergency, man. In South Africa, we've got a more than 50% employment rate all the time, 60%. And they talk about 30%, and they're like happy with it. They're like, that's a good figure. We've got a 30% unemployment. That's the lie. The truth is it's 60%. Okay, it's far more than what they're telling us. People are starving. People are living in shacks, okay? But somehow or another, America talks about unemployment, and the UK and that, and they're like under 5%. That's nothing. It's nothing. It's not even a figure worth talking about, man. And I see their stock market doing this. I mean, that just tells me there's strength. There's so much strength. Can you check the silver chart, please? Silver chart will most likely be pretty similar to gold, but let's go and have a wee look for it. I just want to use one of the other charts that I'm not really using. Let's check the silver. Let's just dump the Great British Pound. Okay, I'm just going to look for silver. No chance of me getting it without. There we go. Is that gold or silver? Let me just see what I've got here. I think that might. There. What have we got here? That's gold. That doesn't look right. Just check something here quickly. Side. Boom, 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 boom. My goodness. Okay, that is right. Okay. Let's have a look at it. See what we've got. Take it from there. What did I take out? I took out the Great British Pound, eh? Yeah. Okay. Let's put it on the day chart. Yo. So quite a lot of movement. I haven't looked at this for a while. I haven't bothered with it. But it looks very bullish. I wouldn't do much with it. I would actually just put a trend line on like that. And there's not much you can do with it, to be fair. Take this line out, you don't need it. Useless line. Go back to the H4. It's just bullish. Wow, straight on bullish. Yeah, straight on bullish. Nothing you can do with it right now. It's just going up and 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 up. That's actually a big move as well. It's massive, 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 massive over time. It just hasn't stopped going up. Look at that. Just keeps on going up. It's insane if you think about it. Look at that. It just keeps on going. Crazy if you think about it, eh? Looks like a lot of stuff is doing that at the moment. You're just going to have to sort of deal with it. You could put a resistance line across the top here if you wanted to. But it's not really telling you much. As you know, I'll always make it green because it's on the top. But yeah, no, that's not going to tell you much either. Look, it's going up. That's it. End of story. If I was going to buy it, I'd probably wait for it to come back, maybe take some money around these levels and then go up. Probably better because you can actually take a blocky. You can put it in here. There's a bit of money there. Wait for it to come back, take that money and go up. If you're going to do anything with it, that is, of course. That's if you're going to do anything with it. If you're actually going to make a move on it or do something with it. Okay, quite interesting. Interesting day. So, the VIX, still on the move. Still on the move. The VIX will always make you money. It's going to spike like that at some stage. Take it to the day. The day is the best place to look at the VIX. Gives you the spikes. And, you know, you can see there's the spike, there's the spike, there's the spike. Somebody's going to say something soon. Nice spike, make some money. That's as simple as the VIX is. Easy trade. Just leave it in. Trade with one line. That's where the money is. Wow. You want to make some money, trade the VIX. Crazy stuff. That's going to make some money at the end of the day. Gold. No, that's silver. Sorry, no. You see, that's why I don't put it on because it confuses me. There we go. Gold is bullish as well. I think all the commodities at the moment are just simply bullish. They're just simply going up. There's not much stopping them at the moment. But I do believe that, you know, we're moving quite far into January at the moment. And I get the feeling that somewhere down the line, there's going to be a bit of a shock, you know, a bit of a shock pushback. Someone's going to say something. Something's going to happen. There's going to be some rhetoric. And already there's the story with the Fed. I mean, if we go back and we go and have a look here at these stories, news, let's just go and have a look at the news. It's just interesting because the former officials express alarm on Powell probe. It has no place in the US. I mean, this guy's been trying to get rid of Powell since he took power, since he took over. I mean, what if he does get rid of him? I don't know. JP Morgan to kick off Q4 earnings season. JP Morgan's going to release earnings. They'll probably do quite well. US stock futures slide after Fed drama. So the US stock futures are going to slide after the Fed drama. I get that because, you know, this whole thing is going to be a problem. But then JP Morgan's probably going to kick off the Q4 earnings season with a good profit and everything's going to go up again. So don't get caught up in that. But yeah, there's a lot going on with those politics. And then there's also a lot going on with geopolitics around the world, with ships sailing around and doing strange things and whatnot. And there's threats of US attacking Iran and all kinds of strange things going on. So these geopolitics are a little bit of a worry in the market. So do take note that they do exist. They haven't gone away. They're there. They're waiting for you. They're hanging about. And they're important to take note of. All of this news is going to take effect. Look at the bigger picture. Look at the bigger news. Don't look at the small CPIs and things like that. This is important. You know, if he does fire this dude, then I don't know. What will it do? It might make something change. So do be careful of that. If you need a funded account, go and get one at EIGHTCAP. EIGHTCAP is there. Go and get your code in my description. Go and grab your EIGHTCAP account, your funded account, and get your best price, get your discount rate. I'm going to be putting a discount code in there shortly. Note here, 83.36% of traders do lose when they trade with us, but you get this day trader challenge where you can trade on the day. That's also fun. It's a new thing that they've come out with where you can choose a challenge for the day, a 1 hour, 2 hour, 4 hour, 8 hour. It doesn't really make much difference because you're trading for the day anyway. You either win or lose that money, but it's a good way for them to make money. Choose your stake and then you can earn from that. Have a look at that. It's actually quite interesting. Just thought I'd show you that since I'm here anyway on this news thing. And it's quite interesting. But the news does play a big part, guys. The news plays a big part in your trading. Don't forget that. Very important. Very, very important to understand that. So Lunchalot, morning, welcome, good to see you. We are you are a bit late, but we do start earlier on Tuesday, so I'll give you that one. That's always fair, eh? Yeah. Okay. What's this? Gold. Let's have a look at what the S&P 500 is doing. Nothing much, sitting around. Don't know what kind of trades you guys are thinking of taking, or what kind of trades you think guys are thinking of doing. But from what I can see, Brent crude oil has been a good, US dollar, Canadian dollar has been a good trade. I must say I enjoyed that. The oil has been a good trade. That has worked out quite well for a trade. Look, Sir Lunch, I traded oil and it actually did well. Haha, can you believe it? Bet you can't believe that. Right, then we have, there's the S&P 500. I was looking for that to see what it's doing. I drew a new resistance in on the S&P 500 and it's sitting on that level now. It needs to break through it. That's 7,000 round numbers. Remember what I've told you guys about round numbers? Round numbers are really important in the stock market. If you get a round number, that's going to make all the difference. Human beings work in round numbers. They don't work in little in-between numbers. So follow the round numbers. They're important. Euro US dollar short, Euro US dollar short. I did call it short, didn't I? And you're quite right. Euro US dollar short. Nothing wrong with that. You see what it's done at the moment, Solange, is it's short, come down. It's done fine going short, but it's coming back up to retesting. Ooh, red candle developing. Probably going to come down. I expect it should at least come down to take this money here. There's some liquidity in this area down here. Maybe break through that and continue on down if you're in luck. Otherwise, it's going to bounce out of that and go back up. But yeah, looks like a fair trade. Nothing wrong with that. This we don't need there anymore. I don't know why I've still got it there. That can come all the way down to the bottom there. And yeah, Euro US dollar short. Just there's another note. I've moved that resistance or support down. So there is a support just below that level. Might hit that support level. So that would be your profit. Not bad. If you took it now, then take profit and stop loss pretty much 1-to-1. Still okay. It's not bad. Still make a profit there. Still a fair profit on the Euro US dollar if you want to make a profit. Not bad at all. So it's only Tuesday, right? So you can actually take as many trades as you want because it's only Monday and Tuesday. You still got the whole week to trade. Just watch out for those geopolitics, particularly over the weekend. So lunch now, no, I actually made a profit on oil. But to be fair, I've made a profit on oil a few times recently, and it has gone pretty well. What's your pick on MQES? My pick is the NASDAQ. I prefer the NASDAQ to the S&P because your S&P's got, it's sitting on that resistance as well, which it could break through. And I did move it up, okay? And the S&P normally does give you that, but it's got to break through the 7,000. but I was looking at the NASDAQ, and that looks fair. I mean, it's hit that resistance level a number of times, and it looks like a fair one going through, but I've got to wait for it to either break up or to break down. So I'm just not quite sure which way it's going to go just yet. Want to see what's going to happen, because what we're sitting with at the moment on these, particularly on these indexes, and it's always like this in trading, and that's why, you just want to take a trade and then you're like, oh, wait a minute. What we're sitting with at the moment is the politics and the fundamentals. So there's a problem with the Fed in the US, and that could affect everything. It could cause a crash. It could cause things to come tumbling down. Then there's also the question of geopolitics, which are going on in the world at the moment. A lot of things going on. So I'm a little bit careful with the long on the indexes. I would like to take the longs, but it kind of feels to me like, for example, on this S&P, that we've hit the 7,000 level, and it's kind of saying to you, put the brakes on, let's just have a bit of correction. And it's that time of the year. We're coming into February. There's good likelihood that that's going to happen. So I kind of feel like something's going to sort of make a noise, and this is probably going to correct down a little bit, come down into lower levels, and then maybe go back up again. Hopefully we don't get a massive crash or anything like that. But it does look like it wants to tick down a bit. It does look like it wants to just fall off the bus a little bit. The other interesting part is if you look at the US dollar index, that's starting to try and come back as well. So you've got this running around here as well. I think let's just keep an eye on it. Let's not just jump the gun. I know we're traders, but I wouldn't just jump the gun on the NASDAQ or the S&P at the moment. Okay. Day trading, I just stay away from altogether. So lunch, I don't do day trading anymore. I stopped day trading because I don't need to in the first place. And secondly, it just keeps you too busy. I don't want to sit here watching charts all day. Not for me. So I'm done with day trading. I really am. It's something, the thing about day trading is basically what it does is it gets you, you get bored, so you get down and you start trading it because you want to trade quickly. You want to trade fast. It's psychological. It sucks you in. And then you end up stuck in it and you end up trading it. And it's fine. I'm not doing day trading anymore. I'll just stick to my position trading, swing trading. That's the place to be. That's the best. Really. It's crazy to start getting hooked up in day trading again. Been there, done that, sold the t-shirt once or twice. But day trading, actually day trading, you said you didn't trade one. The day trading I did worse. Day trading, I would actually take a bigger risk and a smaller win, because day trading, you had to take your wins quickly. And you never really made target properly on day trading. You're always like taking trades, getting out. It's more like scalping than anything else. So day trading, no. I prefer your position trading. You got your position, you plan your position, you get the target, you make the money, you can follow the plan. You tend to break the plan when you're day trading. Most people do. There's very few that will stick to a plan when day trading. Even the best, and believe me, I've seen the best. Even the best of the best do not stick to their plan when they're day trading. They tend to move things around. Oh no, I'll move the stop loss there. Oh, I'll put the stop loss there. Oh, I'll change the take profit to there. Oh, day trading, that's it. That's what happens in day trading all the time, non-stop. Yeah, one of the big things about day traders, definitely they don't stick to the plan. Best laid plans of mice and men. You go in there with a plan, you say, I'm going to stick to my plan in day trading. I'm going to follow this plan to the T. And then when it starts happening, the itchy hand starts clicking in and out and doing things and trading out in and out too quickly, trading in and out too fast, doing all these silly things, and you end up making mistakes, which you really don't want to you don't want to make. So that actually becomes quite an issue and quite a problem in your trading. Crazy enough. On that note, I think I'm going to be on my way. Hopefully the oil keeps on going up. I'm not going to watch that because it's just going to make me want to get out of the trade. But on that note, I think I'm going to hit the road and do my thing. I hope that the one-line trading has helped you guys in one respect or another, one way or another. Hope it's given you something useful. Trading with one line, let's say. You can trade with one line. Generally, you put the support and resistance in, which is 2 lines, and then you put the trend in, which is 3 lines. As you know, we trade 3 ways. We trade with a trend, we trade breakout, and we trade in a range. So either way, you know, you're going to trade those 3 ways. Either way, you're going to put the extra lines in. But effectively, you're only going to use one of those lines to take the trade. You're only going to need to use one of those lines to take the trade. Think about it that way. You don't need all of those lines to take the trade. All I say is don't add 1 million objects into your chart. Don't add 1 million lines into your chart, and try and keep it basic, try and keep it clean, and try and keep it simple, and you'll have a much better trading day. It'll be easier for you to take your trades. It'll be easier for you to see the picture, and you won't confuse yourself. On that note, thanks for watching. It's been great having you guys here on the live show. You guys can't see, I can't see you guys, but you guys can see me. So it's one of those things for this show. Maybe one day we can change that and I'll be able to see you guys. Maybe we'll have a Zoom or something or whatever. I'm still talking about that. I've got to sort it out this year and make it happen. But guys, thank you very much for being here. I'll spot you on the rebound. I'll see you soon. Don't forget to come back and watch all the other videos. And we'll see you for the live show on Thursday. Thursday will be 1200 GMT +2, which is just an hour.